While China is celebrating the Lunar New Year and Japan's markets are also closed for the public holiday, global investors are shifting focus to the news from Europe and the United States. On a Friday, Wall Street indexes notched new record highs. On a Monday, the market promises a new intrigue. The S&P 500 and the Nasdaq closed at a record highs on a Friday. A stunning rally was propelled by stocks of the 7 heavyweights, mainly Nvidia, Amazon, Alphabet and Microsoft. As a result of their rapid growth, the S&P 500 topped the landmark 5,000 points. All in all, the S&P 500 gained 1.5% last week, the Dow Jones added 0.5% last week, and the Nasdaq printed a weekly increase of 2.5%. To sum up, the S&P 500 closed in the green for 14 weeks out of the last 15 weeks. Wall Street did not see such an amazing rally for more than a half a century. The report of crucial importance will be released tomorrow. Market participants will get to know inflation data for the United States, and the consensus suggests a 0.1% downtick on a month and a 0.5% decline on a year in January. If the annual inflation rate actually slips below the December figure of 3.4%, the US stock market will be on the way to new peaks. Meanwhile, European stock indexes have been trading higher, and they are also extending their growth since last week. The Stoxx 50, the eurozone's benchmark index, climbed by 0.3% and secured its 23-year high, slightly above 4,730 points. The Stoxx 600, the broader market index, also flirted with the record highs above 485 points. The fresh inflation data will indicate how the economy has responded to elevated interest rates. The current economic conditions suggest that the Federal Reserve is likely to venture into 4 or 5 rate cuts by 25 basis points in 2024. In contrast, at the end of 2023, the market predicted 7 rounds of monetary easing for the year ahead. On a Friday, Dallas Fed Governor Lori Logan and Atlanta Fed Governor Raphael Bostic warned that rushing to lower rates is not only premature but dangerous. According to the FedWatch Tool, there is a 62% chance of a rate cut at the Fed's policy meeting on May 1. As for the European regulator, the ECB is expected to start lowering interest rates earlier, at the beginning of the second quarter. And today the market is alert to comments by policymakers of the ECB and the Federal Reserve. In the meantime, the economic picture indicates that the US Central Bank is likely to maintain interest at current high levels for longer than its European counterpart. Dovish hints from the ECB are bearish for the single European currency, and the euro has been given in to the firm US dollar. The euro-dollar pair traded in a narrow range for the whole last week. On a Monday, the US dollar is setting the tone in the instrument. Following a nosedive, the euro-dollar pair pulled back from the landmark level of 1.08 and got stuck sideways again at around 1.0770. The instrument is expected to trade in the range today and also on early Tuesday. The odds are that the currency pair will stick to the lower border of the trading range. Importantly, the euro-dollar pair could reverse its trajectory following the inflation report in the New York session, because the median forecast promises a sharp slowdown in inflation. As for the outlook on Monday, the euro bulls need to settle the price above 1.08. Only on this condition the euro will be able to recover. And this level now serves as a strong resistance, so this level could complicate growth and also encourage a drop in the price. And today the euro-dollar pair declined to local low of December. On the other hand, uncertainty about the Fed's agenda could cap the greenback's growth and to restrain the euro from further weakness. Oil prices are trading under a similar scenario. Brent crude tested today $81.2 following a 6% jump last week. Oil prices are trading lower under the pressure of the US dollar's advance. Trading volume is dwindling in the oil market as it often happens before the publication of important economic data. Today, most financial markets in the Asia-Pacific region, including China, Hong Kong, Japan, South Korea, and Taiwan, are shut for the bank holiday. Nevertheless, Brent crude is holding above $81 and $82 a barrel. Technically, the price is ready for a further climb. In this context, the level of $80 remains attractive for buyers. To change market sentiment, Brent needs to break above resistance at $85. And today the Russian ruble is also vulnerable to the firm US dollar. The ruble is losing support due to a slide in oil prices, and the ruble is trading at 91 against the greenback on Monday. The dollar-ruble pair could rise to 92 and even a bit higher, which is realistic scenario. The instrument had the same jump to the end of last week, and the price briefly topped the level above 93. The spike was triggered by two circumstances: a low trading volume and a large buy order placed by one market players. Later on, the dollar-ruble pair retraced to the previous levels. Meanwhile, the currency pair is trading at 91.30 and 91.40. The instrument signals further growth. Here is a market review by InstaForex analyst for Monday, February 12. We hope that our reviews will help you find the right market entry points. Feel free to leave your comments and any feedback. Thanks for watching, and see you online tomorrow.